This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Oil prices eased slightly on Wednesday, after rising more than 1% in the previous session, though ongoing geopolitical jitters provided a floor under prices while traders also awaited an expected interest rate cut from the U.S. Federal Reserve. Brent crude futures dipped 14 cents, or 0.2%, to $68.33 a barrel by 04:05 GMT, while U.S. West Texas Intermediate crude futures fell 13 cents, or 0.2%, to $64.39 a barrel. The benchmarks settled more than 1% higher in the last trading session due to concerns that Russian supplies may be disrupted.
OPEC Plus delegates are planning to meet in Vienna on Thursday and Friday to discuss the methodology for assessing maximum production capacities for the 22-member producer group, two delegates told Reuters on Tuesday. The issue is contentious because some members such as the United Arab Emirates have increased their production capacity, pressing the case for higher quotas, while others such as African members have seen declines. Angola quit the group in 2024 over a disagreement on its production target. OPEC Plus ministers in May asked OPEC's headquarters to develop a mechanism to assess the maximum sustainable production capacity for each member, which will be used as reference for their 2027 production baselines.
Moving on to the top news in the energy sector.
The European Commission will propose speeding up the phase-out of Russian fossil imports, the European Union Executive's head Ursula von der Leyen said on Tuesday after a call with US President Donald Trump. Von der Leyen said that she had a call with Trump on strengthening joint efforts to increase economic pressure on Russia through additional measures. More than 3 years after Russia launched its full-scale invasion of Ukraine, the US and European Union still import billions of euros worth of Russian energy and commodities, ranging from liquefied natural gas to enriched uranium.
The U.S. Environmental Protection Agency on Tuesday issued a proposal for reallocating to large refineries the biofuel blending obligations waived under the Small Refinery Exemption Program, offering two primary options of 50% and 100%. Additionally, the agency said it will ask for comment on other potential volumes, such as 25%, 75% or none at all. The proposal's failure to narrow down potential options is destined to extend the latest clash between Big Oil and Big Farm over the issue, as both industries vie for influence over U.S. energy and agricultural policy. Next, we have the top news in metal markets. India's silver imports are expected to gather momentum in the coming months, supported by stronger investment and industrial demand that has already absorbed the surplus from last year's elevated shipments, industry officials told Reuters. Higher imports by the world's biggest silver consumer could give further support to global prices that are close to their highest level in 14 years. With prices going up, investment demand has shot up, too, nearly twice as much as before, Chirag Thakur, CEO of silver importer Amrapali Group Gujarat, said on the sidelines of the India Gold Conference in New Delhi.
Gold eased on Wednesday due to a slight uptick in the dollar and profit taking after bullion touched a record high in the previous session on expectations of a Federal Reserve interest rate cut. Spot gold was down 0.2% at $3,683.19 per ounce, as of 0515 GMT, after hitting a record high of $3,702.95 on Tuesday. U.S. gold futures for December delivery eased 0.2% to $3,719.50. Gold's ascent to $3,700 was aided by the decline in the USD and by bets that the Fed may signal that follow-up rate cuts are likely to arrive before year-end, KCM Trade Chief Market Analyst Tim Waterer said.
We will now look at the top news in the agricultural sector.
Chicago soybeans eased on Wednesday as the U.S. harvest began without any fresh purchases from top buyer China, though optimism over U.S.-China trade talks lent some early support. As of 0343 GMT, the most active soybean contract on the Chicago Board of Trade fell 0.31% to $10.47 per bushel. Prices had drawn support from news that US President Donald Trump and Chinese President Xi Jinping are scheduled to speak by phone on Friday. China has yet to book any US soybeans from the autumn harvest.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.